In a world where success is often associated with loud statements, luxury cars, and public appearances, there is a man whose story runs completely counter to these stereotypes. Takeshi Kotegawa, known by the name BNF, became a legend in Japanese trading, turning more than 14,000 bags into more than 150 million bags. Yet despite his wealth and success, he remains in the shadows, avoiding the spotlight and continuing to live a modest life. This video is an attempt to peek behind the curtain of a man who chose the path of silence in a world of noise. We explore his origins, his journey to success, the unique strategies he employed, and the philosophy that enabled him to achieve incredible heights. This is a story of discipline, persistence, and faith in one's own abilities. By the way, before we start, join my Telegram channel for exclusive no-fluff content, high-probability setups, deep dive indicator breakdowns, and battle-tested strategies that actually work. No noise, no hype, just what you need to grow, and it's 100% free. Link in the description below. Takeshi Kotegawa was born in 1978 in Ichikawa City, Chiba Prefecture, Japan. From an early age, he showed an interest in numbers and analytical thinking. In school, he was introverted and preferred to spend time with books and computers, avoiding social interactions. After finishing school, he enrolled in university but did not graduate, leaving two subjects incomplete. Instead, he began working in an electronics store and got into computer games, which helped him develop decision-making and information analysis skills. In the early 2000s, as Japan's economy was recovering from a financial downturn, Kotegawa saw opportunity in market volatility. He began studying market patterns and making carefully calculated trades. Without a team of financial advisors, he independently grew his capital using a computer and trading software. His trading approach was based on technical analysis and understanding market psychology. He focused on short-term trades using scalping and swing trading strategies. Kotegawa preferred to trade oversold stocks with short-term growth potential. He avoided leverage and strictly followed risk management rules, so that no single trade could significantly impact his capital. The turning point came in 2001. Japan had long been in its last decade, and more people were seeking alternative income sources. Takeshi, having left university, couldn't find a good job. He had to settle for low-paying, mostly temporary work. He worked in supermarkets, warehouses, and did hard physical labor. From one such job, he managed to save more than 1.6 million yen, about 13,000 at the time. He didn't want to spend it on everyday needs. He had a goal to change his life. That was then he first seriously considered trading. He started reading forums, analyzing charts, and studying the Japanese stock market. Self-taught, with no mentors or courses. He would spend hours in internet cafes because he couldn't afford a computer or fast internet at home. There, he began trading using a basic online platform. His first trades were cautious. He wasn't chasing profits. He was studying price movement logic, not gambling. From the beginning, he developed a key approach, not to predict the market, but to observe crowd behavior. He studied other participants' psychology, looked for patterns. Gradually, trade by trade, he began to build his own style. Takeshi didn't use indicators. His main tools were the order book and price ladder. He would read the market in real time. He focused on small but frequent price movements, scalping. His style was light and fast. He could make dozens of trades per day, entering and exiting positions within minutes. Yet he followed one strict rule: maximum discipline. If a trade didn't meet his criteria, he would enter, even if it felt like it might go. He created spreadsheets, recorded every trade, analyzed mistakes. He turned trading into a scientific lab, not a gambling game. And he learned from his own errors. In his first year, he didn't double his account, but he didn't blow it up either. He He consistently grew profits and, most importantly, developed a rock-solid trading system. One key element of his strategy was understanding volume and crowd panic. He waited for the market to enter a stress phase, sharp drops, volume spikes, chaos. That's when he would step in when everyone else was selling. He profited from others' fear. It was risky, but with a cold mind, he turned it into math. By 2005, Takashi Kotogawa had already evolved from a beginner into a disciplined trader with over 100 million yen in capital. He still worked from his modest base, didn't buy luxury goods, and kept a low profile. His goal was capital, nothing else. And then came the day, December 8, 2005. On the Tokyo Stock Exchange, an epic error occurred. A young employee at Mitsuo Securities made a mistake when placing an order to sell shares of the young company GCOM. This was technically impossible. There weren't even that many GCOM shares on the market. But due to a technical error, the TSE allowed the order to go through. Most traders were confused. Some didn't understand what was happening. Others panicked. But Takashi saw a unique setup, a market in chaos, GCOM's price crashing, wild liquidity. This was his chance. He immediately began buying GCOM shares near zero. He knew it was a glitch, not market logic. He understood the fair value was hundreds of times higher. When the market realized the mistake, the price rebounded sharply. Within minutes, Takashi made 1.6 billion yen, about 13 million bucks. The trade made him famous across Japan. He became a legend, and yet he didn't go on air. He gave no interviews, he stayed home, drank cheap tea, and clicked his mouse. His image became a cult, the silent genius who beat the market at its most unstable moment. After the GCOM trade, his capital soared, but Takashi didn't retire on interest. He kept going. His goal was capitalization, not status. Over the next 2 years, he executed one of the most impressive capital growth runs in modern trading history. By 2008, his account surpassed 18 billion yen, over 150 million bucks. This wasn't due to one lucky trade, but thousands of precise, cold-blooded, and disciplined operations. He traded daily. No weekends, no emotions, no system violations. Interestingly, he didn't use leverage. That made his growth even more astounding. He grew his capital without debt, purely through logic and discipline. He didn't take excessive risks, didn't chase IPOs, didn't speculate on cryptocurrencies. Just the Japanese stock market. His trading became a hot topic on all Japanese forums. People made myths. He's a bot, he works for government, it's a 10-person team. But the truth was simpler, a lone man with iron will and total emotional control. By 2008, the name BNF, as Takashi Kotogawa became known online, had become legendary. Amid the trading boom in Japan, his name appeared in TV reports, newspapers, and financial forums. However, in 2006, he did give a rare interview on Japanese television. It became iconic. Then asked, "Are you a rich man?" He replied, "I don't know, I just trade well." In 2008, he invested around 27 billion yen into shares of Japan Rail. Railways in Japan are not speculative assets, they are the backbone of a nation. Mysterious trader buys up GR, who's behind the billion yen injection? Even as a shadow oligarch, BNF changed neither his lifestyle nor his business approach. He didn't become a venture capitalist, a hedge fund manager, or an influencer. How calm can overpower emotion? How being alone can matter more than connections? He became the anti-hero of the show-off era. Make sure you subscribe so you don't miss more powerful stories and key lessons from the world's greatest traders. You'll find even more insights, setups, and tools for your trading journey in my Telegram channel. Check it out! Thanks for watching, guys. Your support means a lot.